Good evening, traders, and welcome to Price Action Trading School. Today we talk about counter trend trading, and this is how we will do counter trend trading also in live sessions if we get the opportunity. So Price Action Trading School counter trend trading is just about to begin. Before we begin, our standard risk disclaimer explaining that CFD and Forex trading are leveraged products and can result in losses that exceed your deposits. And this presentation is for informational and educational purposes only. The video is not part of the .co.uk website, but the globalnews.com website. Forex is risky business, and this webinar is for informational purposes only. So my name is Leonard, and today's agenda. We will talk about counter trend, timing, then ABCD pattern, 5-0 pattern that we also use for making counter trend trading opportunities. Okay? So first, let's start with counter trend. What is a counter trend move? First of all, counter trend move is so-called fade. Probably you have heard a lot of times that big banks, hedge funds, and big traders actually fade the move. So when price starts going up, suddenly you might see it reversing. It's called a fade. Also, when price is heavily going down, and if it suddenly starts to reverse, it's also called a fade. So fading the move is a special technique and tactic that is based on sudden price changes and possibly profit taking. I can say retail traders or smaller institutional traders usually fade the move when it already started. That is wrong technique, because the best what we can do is to join the move that is about to begin or that has just begun. So that is the primary purpose of my teaching in price action trading school, how to counter trend trades that are about to happen or have just happened. That way we are ensuring that we are entering the price at the earliest possible point, but still we need to see some confirmation for our entry. We cannot take blind entry. Okay, so counter trend trading is simply different from trend trading. But still in counter trend, we need to determine the zone, and we need to find the zone that is suitable for making counter trend moves. It's also end of day trading. Very often you will see that some counter trend trades, profit taking trades happen at the end of the day. So that's why we call it end of day trading. It's also profit taking, because counter trend moves are based on profit taking. Have in mind that every close of a buy position is automatic sell into market, and that is what your platform does in the background. Also, every close of sell position is automatic buy into the market, and that is why you will often see that some moves that are in uptrend suddenly start to reverse. That is because price has hit important resistance, and majority of traders, or simply a strong institutional trader or bank, is closing their big longs or big shorts, and that is why we see the opposite move in the market. So each close of buy or sell position is automatic counter move in the market. It's a very effective way actually to make additional profits, especially guys if you miss a trading opportunity. Today I have published a new blog on Admiral Markets website, And here is how I actually do it, okay, when I miss my entries. So here you can see that I also mentioned counter trend trading. So this timing is very important, and we will also talk about it today. So the advantages is, first, it requires patience, okay? So that means that you need to have a good timing. If you miss a trend-based entry, you can wait for counter trend move. You don't need to rush for some entries that are not that good, simply because you know that there is a trend and you want to jump on a freight train. That's called chasing the price, and by any means that is wrong. Usually traders miss these initial moves and they want to join a big trend once the price has hit resistance. Well, that's completely wrong ways. No matter how many times you have won these kind of trades, eventually you will start to lose, because resistance is where institutions, hedge funds, professional traders sell. They don't buy at resistance. Unless you want to go for 5 pip highly leveraged trade and get 5 pips, $1,000, and you go out. Well, that's not real trading, guys. For example, today we saw another push in dollar CAD to the upside, and I have recorded the trade. I have recorded the trade live. I will publish it later. And you remember previous session recap where I said dollar CAD is long, and we actually had a first entry at 32.15 during previous session recap. Well, guys, you can afford 50 pip of stop loss if your risk is not that high. So a trader today asked me what I think about dollar CAD, and I said it's okay because I have 50 pip stop loss. So my 2% of risk has been calculated in, let's say, 50 pip of stop loss. But if you have a smaller account, let's say accounts that are 1,000, 2, 3, 4, 5, those are small accounts, then you need to use a really low leverage like 0.10 initial entry, and you can afford big stop losses, guys. So I mean, everything is about risk. So when you try to counter trend trade, have in mind that that's a completely opposite logic of taking trend trades. But its advantage is that it gives you additional chance if you already missed a trend-based entry. Okay? Also, it will teach you about market flow, because traders who are only trading trends and who know just about trends, only about trends, they don't know what to do if they're caught in a big drawdown. They simply cannot determine where and when to take that counter trend move. Because of that reason, by practicing counter trend moves, you might learn about additional market flow. And you have additional setups if your positional trade has been missed due to some reasons. Now, traders occasionally ask me, what do I do if I missed positional entry based on POC zones? Well, I again take a look at POC zone, and if I see that it's still good, I can enter the market. But if I really missed the entry, then I might opt for counter trend move once the price reach its extremes. Mark my words, best trades for counter trend movement is when price reach its extremes. How do we know what extremes are? Well, we will soon find out. Entries are based on lower time frames, different patterns. So if I use 1 hour time frame to chart, to mark the zone, to mark POC zones, I will use 15-minute time frame to actually spot ABCD pattern. So ABCD patterns are very, very strong, and it's one of stronger classic chart patterns, but it repeats in Forex market always. It's historically supported, and ABCD is one of my favorite patterns to trade potential counter trend moves. ABCD pattern is measured move. It was developed by Mr. Scott Carney and Larry Passavento, and first originally it was discovered by Gartley, but then Scott Carney and Passavento popularized this pattern. The first thing is that distance between A and C should be like 61.8, and in bearish examples it can be also between 61.8, but sometimes, guys, it might differ, like 1.786 or something like 88.6, 78.6, but not less than 61.8. So you need to determine whether the distance is below this or it's, for me, I don't want to see distance that is below 61.8. So that is very important for me personally. So for that ABCD. So the distance between A and C should be this, and this is this distance between B and D. Okay, when you see this, then usually those patterns are strong. So no less than 61.8. It's important because not each ABCD, guys, is valid. And that validity I determine by these ratios, harmonic ratios, between AC and B and D. These patterns are very powerful, and even some trend-based moves, not some, but very often trend-based moves, if you already missed a zone for entry, you can watch for next swing in a form of ABCD and try to take the entry. Don't forget, POC zone in my teaching is the single most important zone for taking the best possible entries ever. Then there is other patterns such as ABCDs, 5-0, 5-0, and so on. So guys, ABCDs are strong, both in trend and counter trend moves. We have three types of ABCD. Classic ABCD, AB equals to CD, okay, and ABCD extension. Those are, guys, just variations, okay? So classic ABCD is 61 to 78, but I can afford, and in my teaching, everything that is higher than 61.8 is good, okay? Everything that is higher around 120, above 127.2 is good. I don't personally pay attention if it's strictly 78.6 or something. For me, it's important that it's higher than 61.8, okay, and higher than this. Now, of course, if we spot the pattern that is 61.8 to 78.6, we can say it's a perfect ABCD. But, well, I mean, we don't need perfect patterns, guys. Really. AB equals to CD is when actually distance of AB equals to distance of CD. I mean, it's okay, but it's not necessarily a requirement. And the extension or extended ABCD is when CD is 127.2 or 161.8% longer than AB. I mean, still it's good because major thing is that A to C is above 61.8 golden ratio, or 61.8. If you see that it's less than, guys, the pattern is not valid. I advise you to take hold of some free indicators on the market and try to use those, because it's very important that those indicators show you the ratio of 61.8 or this AC or BD, because some of those patterns, yes, PZ indicator is good, it's free, so this is not marketing for that kind of indicator. I have it myself, so it's good one, it's free one, but I don't pay attention to arrows. I will explain. The only thing that I'm paying attention to these patterns is ratios, guys. These ratios are important. Don't forget, guys, you don't trade the indicator. You're not interested what the indicator tells you. The indicator just gives you the pattern, and you as a trader need to determine whether the extension is good or not. And this is primary requirement. This needs to be 61.8 or higher, and this one. Other than that, it's not good. 5-0 or 5-0 is a 6-point retracement harmonic pattern that cues also for big market movements, because it's similar to ABCD. It's a reversal pattern. It can be a reversal pattern. Okay, so it can be a reversal pattern. But the thing is, guys, this is actually bullish. This is, I mistyped it. This is bullish. Okay, or sometimes, guys, this can be bearish. I will explain you in a real chart, and you will see what I mean. By standard teaching, this is bearish and this is bullish, because usually after this you might expect the price to go up or go down. But guys, it depends on the initial move. Okay, because you want to take this in counter trend environments, contrary to ABCD, where you can take trend trades or counter trend trades. You can take both trades. 5-0 I exclusively use for counter trend moves, and that is what I will show you in on real chart. Okay, so the thing is that the distance between A and C needs to be 1.618 to 2.24. Okay, that is the distance between A and C. The distance between X and B should be 1.13 and 1.618. Okay, and distance BD is 0.50. Again, these are the smallest numbers we are looking for. Sometimes you will see extended pattern that has ratios slightly higher than these ones. It will be much easier for you to understand once I open real chart. Another potential entry we can take with counter trend trades is candlestick entry. Okay, is the screen frozen? Yeah, this is okay now, guys. So you see now my screen. So I will explain this, of course, on a live chart, so it will be much easier for you. Okay, but have in mind that these ratios are classic bearish and bullish 5-0 patterns. Okay, and another thing is those candlesticks. Candlesticks for me are also important, but you know, if you've been following price action trading school, you know that wicks for me are more important than bodies. Because of that, we can also use rejection candles or pin bars. Okay, so we can use rejection candles and pin bars. So for all of you who are joined later, okay, here, these are the main things about counter trend trading, and these are patterns that we use, ABCD and 5-0 or 5-0 pattern. Candlesticks also are very important, and I prefer pin bar rejections. So these are pin bar rejections. Very important rejections of support and resistance. And guys, one of the most important things in my counter trend trading is ATR pivot points, ATR levels. This is how indicator looks like, and I think that you already have the indicator. But guys, I am focused on ATR period on 14, and I use ATR. I don't use average daily range. I use ATR, okay? So those are most important things that we use. And now I will just give you a slight explanation of ATR indicator. But, well, very important thing is to know about these patterns, because counter trend moves are used on 15-minute time frame, guys, not on 1 hour time frame as we use trend moves. I personally use ATR mode set on 14. So it calculates ATR pivot points on the algorithm of ATR indicator using the data in the last 14 days. This is the formula. This is main intraday resistance, okay? And this actually is strong intraday support and projection lows. I prefer for this indicator, indicator always helps us, and it's very accurate because it actually gives us projections of highs and lows that are extreme projections, and we couple it with historical levels of support and resistance, and especially if ATR is hit or overshot, we look for counter trend based opportunities. Stops are, guys, not important. Stop loss can be 50 pips if you risk 1 or 1.5% of risk. Stop loss can be 100 pips, but don't forget that you put the risk inside stop loss buffer zone. Okay? It's very important. Few comments before I move to live chart. Ilya is saying hi. Hi, Ilya. Hi to you too. Leon is saying, I love your dollar yen analysis and indicator. Dollar yen dropped from top of ATR 95 pips today, 75 yesterday. Exactly, Leon. I mean, ATR indicator is great. Ilya is saying, what were the news that made spike today on all dollar pairs? Crude oil. I guess it was crude oil, and crude oil data actually spiked dollar pairs. And I really was enjoying that because I had a long again on dollar CAD. I'm really an avid buyer of dollar CAD dips because I think the dollar CAD should go more to the upside. And from now on, and I mean, you will see that also in my analysis and session recap, until 38 is broken, I will buy dips on dollar CAD. Also, guys, M is the main pivot point for the day. And this is formula. Today high and today low divided by 2 gives you ATR pivot point. That is the main pivot point for the day. Screen settings for ATR are 14 ATR period, and we use mode 1 because we use ATR average true range. We don't use average daily range, guys. I use ATR of 14 for intraday trading. And intra-week, of course, I mean, you can carry the trade on 1 or 2 days. Usually it's like from 15 minute to possibly 2-day long trade. This is how it looks like. So this is the distance between projected H1 and L1. If it says 60 pips, okay, see, H1, L1, 60 pips, and it will say here 60 pips. Actual high and low for the day projected was, no, actual high and low is 72 pips. It means that the price already overshot these projection levels. So if projected level was 62 and the price went up, okay, you see 72 pips. It means that it overshot it. You see the price already went up. And it's a good thing because there you look for counter trend trading opportunities. You need to see ATR level hit, and you need to see historical levels of support and resistance also being hit. Then, only then, you need to search for possible entries. How it looks like on live chart, guys. This is MTF approach. I will show you right away. So this is it, guys. Okay, let's say, because we cannot see ATR in history, but let's say that projected level, just for example, now follow me carefully. You need to see projected level. So for example, if this day here showed ATR low of this price here, you see ATR was overshot and dropped. But what you do is you need to go on 1 hour time frame and do this. Remember our first lesson. Press Control and Y and search for quadrants, guys. These are price quadrants. Mark previous 2 quadrant historical highs and lows. So this is today price action. Yesterday high was here. Yesterday low was here. Then a day before high was here. And day before low was here. You need to mark this. This is how I do it. So press Control and Y on your keyboard and watch previous 2 quadrants. So this is today quadrant. You need to watch previous 2. So let's use this example. So for example, guys, we saw that the price was, now I missed this. Okay, here. Let's say that this was projected ATR and projected low for quadrants. You see, price missed it. I mean, it went below the level. So this is the sign that you might go for a counter trend trade opportunity. Break of ATR projection, and break or hit of previous quadrant low. You see? But you also need to determine whether the extension was good. Okay? This is obviously extended A, B, C, D. Okay? And watch what happened. Okay? Again, A, B, C, D. Is it higher than 61.8? Yes, it is. Is it higher than 121? Yes, it is. And what happened actually here is, or 127, yes, it is. I mean, 127 is the lowest, and this is 147. So, see, it's valid ABCD, and watch this. You might, this indicator shows the arrows, but I mean, I don't really care about it. I don't care about arrows. How I trade it is, I watch for break of ATR, touch of ATR low, touch or break of previous quadrant low for long trade, and then once the first candle goes up, I wait for the break of this candle high. So this is actually, okay, this is okay arrow, but I always do it manually. This is the entry. When I see the break of this candle by 2 or 3 pips, I enter the market. This was previous quadrant's low, guys. Okay, previous quadrant low. See? High, sorry, previous quadrant high. And let's say, just for example, that this was ATR maximum. So AC is higher than 618, it's good. BD is higher than 127 or 127, so it's good. And when this candle low is taken out, okay, this candle low, if it's taken out, it's a good counter trend trade opportunity. Okay. Targets, guys, are actually pivot points and previous historical and support zones. I don't use targets like harmonic traders do. My primary target are next pivot point, or let's say previous level of support. So if this was a drop, you see the price range there, so this could have been the entry here. It went for 12, 13 pips, eventually 15 pips, and start to go up. But my first target would be, I want to see momentum, or else I would close the trade. Would be like these levels, previous support or pivot point. I don't have pivot points here on chart, but let's say if this was a historical pivot point here, I would probably take the trade there. I would prefer to see, guys, some real, let's see if we have some real example. Okay, let's do it step by step. We just need to see if there was some real example of potential entry. If not, guys, then okay, great. This is today's example. You see, Australian dollar yen counter trend trade. Australian dollar yen example. I will use this. So first, go to 1 hour chart. Okay, 1 hour time frame. And mark quadrants. You press Control and Y to mark quadrants. Then, guys, this is today. So for yesterday, this was top, this was bottom. For day before, this was top, this was bottom. Okay, something like this one. So what then, guys? Then, you see, this is today's top ATR. You see, ATR, okay, I will just use this, guys. This is much better, 14, 14, 14. Okay, so ATR of 14 is 72 pips. Today ATR overshot ATR of 14 by 17 pips. So you see, the high of ATR was broken, and also the high of previous quadrant was taken out. Okay, 15-minute time frame shows ABCD, but we guys need to determine if it's good or not. Okay, so this is A, B, C, D. A to C 63.5, it's good. B to D 1.488, it's good. So my entry is not, okay, this is just candle by indicator. Indicator, guys, just helps me to see patterns more clearly. Because if I do this, if I did this manually, I would definitely lose a lot of time, guys. I don't want to do anything manually. I am a trader. I want to see help from indicator, and then I determine whether it's good or not. So this is good, okay? All extensions are good. This would have been my entry. The low of D was here. So once the low of this candle here is taken out, we enter the market. So here we would have made like 13, 14 pips. I mean, guys, this is counter trend trade. Okay, this is counter trend trade. Sorry, guys, for indicators. You really need to go to, I cannot do any marketing. I am not affiliated by any means to a guy who actually made these indicators. It's called PZ. You can Google for it. And it requires to leave an email there to actually get the indicator. So I cannot give you, you know, I mean, it's free, but you need to leave your email probably because of some marketing offers. You know how it goes. So, I mean, if I had MQ4, I could send it to you because MQ4 is the source code. But of course, I don't have source code, nor I am not the creator. Chris and I have our own coders who do coding for our indicators. But you know, guys, when we talk, I mean, I don't know. You can maybe, you just need to leave email. What would you decide to do with email? It's up to you. But I guess it's used for his database. I don't know. But the thing is that it's good. It's good indicator, and it can help you in your trading decisions. I don't know how it works on other platforms other than Admiral Markets. But you know, guys, I always say I have different accounts only with Admiral Markets. I don't trade with other brokers. And on Admiral Markets platform, this indicators works perfectly because Admiral Markets platform uses the candle close of New York, and actually it goes 1 hour ahead of, or it's actually Eastern Standard Time. It's 1 hour ahead of my time, so it's great. So these candles, you know, for good patterns, you need to have clear candles, accurate candles. And I can say that you really, I mean, really, guys, try. I mean, I know that a lot of people are watching this also from YouTube. Open the account with Admiral, and everything what I talk is verified. So for this platform, indicator works fine. For other, I don't know really. Especially because I have heard that lately some brokers did spikes. And you know, guys, if you see the spike on the candle, okay, well, this ABCD might not work. And a lot of things might not work. So definitely go with Admiral and you will be safe. But you need to make your own decisions whether ABCD are good or not. Okay, I already showed you how to make these decisions. You need to watch if A to C and B to D is actually effective. So guys, sometimes it's up to you, but sometimes if you see that D point is really rejected, I mean this was above ATR, you can actually enter the market here at the close of this candle, not the low. So those are two types of entries that I make, but you need to definitely have some experience in counter trend trading in order to do this as I do. I personally would not wait for this low to be broken. I would probably place my trade here because it already overshot. It hit and it overshot the level from 2 days quadrant. So I have a confluence here, ATR high and previous quadrant high that has been taken out. So for smart traders, this is not the place to go long, guys. We go short here. I mean, even though if the price should have gone maybe up or could have gone up, I don't care really. I trade as professionals do. I want to exploit counter trend movement in the market. So that is why I see how the price is dropping now. Okay, this is logical. This was clear example of a counter trend move. You see? Okay, 20 pips, guys. You can use ATR pivots to take profits. I mean, whenever you are making counter trend move, have in mind that usually counter trend moves are retracements in the trend. So if the trend was to the upside, guys, which it is, see, this could be retracement just for another up move. So take counter trend moves with caution. Because usually counter trend moves are retracement moves, guys. Retracement moves. Okay? So that is why you really need to be careful about it. And take profits by ATR pivot points. You can also do historical levels like I showed you, but if you have this indicator, it's easier to get profits with ATR pivots. Let's see if we had another example. Okay, here guys, yeah, you see here, I mean, I definitely would have traded this here probably. See? Yeah, because this was low, so okay, it doesn't matter. It's 2 pip below the low, so it was like this, entry. So let's see, 1 hour. You see yesterday high, okay, this is, we need to mark this, okay? I will remove this one and mark previous quadrant high, previous quadrant low. Then again, previous quadrant high and previous quadrant low. Okay, sorry guys. Okay, again, screen is frozen. Sometimes it freezes automatically. So here, Australian dollar. Okay, previous quadrant high, previous quadrant low, previous quadrant high, previous quadrant low. Once you do this, you zoom in to 15-minute time frame. Let's see, this was our entry here. So it was way above yesterday quadrants and previous quadrant high and above ATR. So if you traded this here, you would have made like 19, 20 pips. You see? And again, this is what I was telling you about. Australian dollar is in uptrend, guys. Now, at this point. So this move, counter trend here, was retracement. Okay, you see, this was retracement. So guys, what I'm telling you is take counter trend trades as retracement trades with caution. You don't want to be caught in some move that is not justified. You need to take trades really with caution. So this was good example of the move. Now I'm not sure, guys, because the move already happened. This spike here telling me that price might go still to the upside. But here you could have made 20 fast pips on counter trend. If you miss this pivot point, well, you could have taken profit here or there, or at least break even trade, but you wouldn't lose on this one. Let's see if we have other examples of either 5050 or this pattern. Okay, here, let's see if this was good, okay? 1 hour quadrants first. Yesterday high here, wow. Yesterday low here. Previous high here, previous low here. Well, Euro GBP, yeah, this. Now 15-minute time frame. Okay, guys, you see, it was hit. So this here is H2. It's also resistance. It's not that strong, but it's resistance. But here, this was previous quadrants high. Previous quadrants high or low. I guess this was low, but still it was, let's see. No, actually this was high here, you see? So 2 quadrants previous high. So this was high. And now you see what happened. I mean, this was so good. But you know, when you are busy, when you're watching different things, you might miss these trades. But you need to pay attention. Really, you need to be focused. Really, sometimes I also miss these kind of trades because we cannot take everything. But guys, you know, here this would have been your entry. here I would probably place my entry here because this is strong. You see, pin bar also, guys. As soon as this candle closed, I would place my entry. I would have placed my entry because this is what we've been talking about. Pin bar rejection, guys. Pin bar rejection. You see, your entry was at the close of this candle, and maximum number of pips you could have made here was 40, straight to ATR level. That is how I do counter trend trading opportunities. Okay, still, you are traders, so you need to estimate whether the entry is good or not. You cannot say, okay, this is a trading system. This is the part of price action trading school, and this is great thing, but you still need to assess each potential signal for a trade as a trader manually, because I always say, I want you to be, all of you, traders, professional traders. I want you to trade like banks do. I don't want you to trade like the rest of retail traders. Because of that, you need to assess each signal as a trader. Okay, guys, and let's see if we had some other potential trades, moves, whatever, and then, okay, here, yeah, this was not big enough. We need to hit here, these levels, guys. We really need those lows to be taken out, or highs. See, this could have been counter trend trade opportunity. So the least what I want to see is in between blue and this. This is much better, but the least is this one or this one. But still we need to see highs and lows. Without it, we cannot say that it's good. Okay, let's see now. 1 hour chart, yesterday high. Oh, this was taken out. And yesterday low. Yesterday high. Yesterday low. Okay, let's see now. Obviously, the high from yesterday was taken out, so this is strong trend. Well, you need to definitely assess this manually. Let's see the ratio. I need to zoom out really from this. AC, guys, is not good. Okay, I mean, it's literally it's at the verge of being good. 59.3. So, you know, it could be good. It's not that good. So you might think about this potential trade. So we would say it would have been probably disqualified. Really, we need to see those ratios respected to the pip. Yeah, we don't see. Okay, here. Let's use, for example, this example potential. Again, AC, okay, it's not great. This is good. This is not so good. But still, guys, this could have been maybe a trade if you, I mean, you see AC is 53.9. I like to see 618 at least. But definitely, okay, but okay, as a trader now, watch this. 2 pin bar rejection, guys. 2 pin bar rejection. So let's do the analysis for this one. Let's do the analysis. Projection for today. This is today quadrant. Yesterday quadrant low. Yesterday quadrant high. A day before low. Wow, this would have been a good counter trend trade and high. But watch 15 minutes, guys. This is why I'm telling you. You need really to watch all these things. Watch this, guys. Yes, AC it's less than 61.8. So it's not that great. This is higher than 27.2, so it's good. But guys, watch this. 2 pin bar rejections, very, very close to this yellow level, projection low, very close. I mean, these are buyers, strong buyers. So when this candle was taken out by 2 or 3 pips, I would probably make counter trend trade opportunity. So, you know, sometimes you need to do these things. AC ratio was not that good. ABCD was okay if we if we actually discount this. It's okay. It's not perfect. And if this level here, yellow, ATR pivot, hadn't been hit, and if I hadn't seen 2 pin bars, I would have disqualified this trade because this is not good. So you see now the logic. You need to assess every single time validity of each signal. An indicator there is to help you to assess it, guys. Okay? And rules for 5-0. Let's see if we have 5-0 pattern somewhere. Okay, here I will show you the slide. This is a rule. These ratios are important. Now snapshot the screen. But guys, honestly, you will encounter and you will find much more ABCD patterns than 5-0 or 5-0 patterns. I prefer to call it 5-0 because 0 is also called O, so it's 5-0 for me. So these are the rules. I mean, watch these ratios. You don't want something that is lower than this or lower than this. Okay? You want higher than this, higher than this. That is how I do it. I never watch simply the basic definitions of ABCD and 5-0s. This is perfect. Okay, and I want to see this higher than 61.8. I don't mind if it's higher than 78.6. But you see, even if it was lower here, we still had a good trading opportunity simply because other confluence points were performing much better. Like 2 pin bar rejection, double bottom, historical level here, and ATR low, guys. So I might say that this is improved teaching of ABCD and 5-0. I mean, this is the part of counter trend trading. Guys, try to practice this. I mean, on live trading, if we get the opportunity, we will trade this live. So try to practice this, and I hope that you will be satisfied. If you have any questions, please do ask me. I'm really looking forward to showing you more of session recap setups and Wednesday live trading. And this is important for you to know. This is how we estimate counter trend moves. Of course, guys, one more thing before I forget. Divergence was, let's say, a year ago or 2 years ago, the most important part of my teaching, divergence. But I have changed my teaching and my lessons for counter trend movement. Once where I was making practical naked trading and price action trading school, well, back in 2015, I still thought that divergence is something that we should always see in order to trade counter trend. But I might say it's not the case today, because this divergence, if you see it, it will be another part of confluence. If you see divergence, guys, even better. But it's not primary rule for counter trend moves. Primary rules are proper ABCD retracements, ATR levels, and quadrant historical lows and highs. If you see divergence, that only better. Okay, you can say that that trade might go in profit because we have another confluence such as divergence. But it's not a prerequisite for any trade. Okay, I hope it's clear. Leon is asking for ratios here. These are the ratios. And still, I mean, Leon and others, please do assess the ratios. This is the least number. This is the least. Okay? Everything above it is good because it can be extended also. But what I want to say, guys, if you see, as we saw it here, double bottoms, strong pin bars, close to ATR support and historical levels, you might neglect this. But only then. Otherwise, these are ratios that you should use. And don't overtrade with this. One counter trend trade per day can make your day and make your life happy. Don't overtrade. Don't take too many trades. There are literally 20, 35, 30 pairs that you can trade, even more. So try to find a good one and trade it and you will be happy. Don't overtrade. The biggest problem in trading is money management, overtrading, and poor risk management. You can be a hell of a good trader, but if you really don't pay attention, guys, to money management, to risk management, I am sure 110% that your account will be in a loss. I have experienced everything in my trading career, both good and both bad trading decisions. And everything that I've been talking with you is from my personal perspective and my personal experience. So pay attention to what I'm saying. I might save your account from a big drawdown. Thank you guys for listening to me. This webinar is recorded. It will be uploaded, of course. And I will personally upload it. Maybe today, maybe tomorrow early. And if anything is not clear, of course, guys, just please ask me. I'm there to help you. These are the indicators. Okay, you need to search for those on the internet. ATR indicator I can give you, of course, but these two indicators I cannot give you, guys, because I don't have the right to give you. It's free, but you need to enter emails, whatever, on that website. And still, guys, before I finish, I strongly advise you to trade this, especially these patterns on Admiral Markets platform, because candlesticks are excellent, liquidity providers are excellent, and the information is true. There are no false spikes like on other brokers. I cannot name it, but you know what happened a month ago or a couple of days ago with some spikes. You can also read it on Forex Peace Army, so I will not mention it here. Thank you guys for listening to me. I will be with you soon and talk to you soon. Cheers, guys. Trade safe.